And welcome to a VSA Capital video blog. And delighted today to have Steve Kesler, the executive chairman of CleanTech Lithium, and also currently the interim CEO, because you're running the show, Steve. And we're talking to you today really because you've had a flurry of news actually over the last few days, sort of 3 announcements. So we wanted to just talk through those as well as perhaps a few other things. And we've also got Paul Renken, our in-house geologist at VSA Capital on here. He's going to try and catch you out on a few technical questions maybe. But anyway, hi Steve, how are you doing?
Very well, Andrew. Nice to chat again, and nice to catch up with Paul also.
Hi,
Yep.
yeah.
Good. Let's just, the first 2 that came out were you put in a pilot plant process result, which was very, very successful. And you also had a CEOL submission. Do you want to talk through those, and then we'll talk about your resource update?
Yeah, sure. And particularly the CEOL application and the resource are pretty closely linked together. But the first one that we put out was the follow-up work on our pilot plant, work with conductive energy in Chicago. Just to recap, we've been processing our brine at Laguna Verde through our pilot plant, our DLE pilot plant, concentrating that to about just over 2,000 ppm lithium using reverse osmosis. Then rather than having the downstream plant ourselves, we're using the existing facilities of conductive in Chicago. We put out about a month ago details of the first processing, nice pictures of lithium carbonate coming off the filter presses. We've continued that work and sent the first material for laboratory analysis. Came back very good, 99.78% lithium carbonate, so very high grade. Just to refresh people's memories, there's no real international standard for battery grade material. It's generally accepted. 99.5% is battery grade, but all the different battery manufacturers have slightly different requirements for the various impurity levels in them. The only real national standard is the Chinese national standard for battery grade, which is 99.6%, and they specify a whole list of maximum impurity levels for various elements. Even though we've made the 99.78%, there's a few of the elements which don't quite make the Chinese spec. We know where we need to improve. We've paused the work in Chicago whilst we're making modifications to the plant, essentially adding a nanofiltration unit to eliminate more of the calcium and magnesium before it goes to the final ion exchange polish, and some improvements to the carbonation and washing to wash out the final traces of potassium and chloride. So we're very confident in this next phase, which we're getting to at the end of this month, and we'll process all the rest of our material through February and into March. Confident of making battery grade material that meets the Chinese specification. And as we've said before, in the design of the plant that we're undertaking in the pre-feasibility study, we're working with Lanshan Advanced Materials on the process engineering design, and their criteria is to warranty that we get Chinese battery grade standard. That's where you want to be. No, China is the biggest buyer of lithium carbonate, biggest manufacturer of batteries. So obviously we would like to meet that standard. We're very confident. Having got 99.78%, we just want to clean out a few more of the impurities and get there. So that was a very positive news release. Then we put out a notice on the CEOL. I think we talked in the past that Chile is a bit different to most other mining jurisdictions. It regards lithium as a strategic mineral reserved to the state. But the state do give out either concessions, as they've done with Albemarle and SQM, or what they term special lithium operating contracts called CEOLs. And they've announced last year that they were going to offer 26 salars in Chile to the private sector to develop, of which they're going to prioritize 6, which they believe have the best potential for development, and one of those 6 being our Laguna Verde project. We are the most advanced DLE project in Chile. We've done a lot of work, and we filed our application last week, together with 1,200 pages of supporting documentation. Now, it's normal in Chile when a government gives out a contract, it goes out to public tender. But in this case, the government has said that if an applicant for an operating contract fulfills a number of criteria, then they can go into a streamlined process, which is a direct negotiation with the government. And there were 3, well, essentially 4 criteria. One is that the company must be a participant in the lithium industry, either in exploration, exploitation, operation, or downstream value added. We're demonstrating that we fulfill 2 of those, exploration and exploitation. We have the backup of our scoping studies and pre-feasibility study, which we're engaged with now on Laguna Verde to support that. They then need to see gross equity on the balance sheet exceeding $30 million average over the last 2 years, which we provided the balance sheets for that. And the third one is where it comes into linking into the resource, that you must be able to demonstrate that you hold over 80% of the mining licenses in the CEOL application area. Now, when we were working over the last few years, we've been looking at the entire Laguna Verde Basin, where we have a dominant license position, but we don't possess all the licenses in that area. And when we filed originally in 2022 for a sale, an operating contract, we filed on the basis of wanting to get a sale area over the entire basin. So when we put our resource statements out, it is the resource in the entire basin. Now, the government, in stating that it wants to see at least 80% of the licenses, we have submitted a polygon which demonstrates we have over 80% of the licenses, but it doesn't cover all of the resource of the basin. And we've declared in the resource statement, which we put out today, that we have a resource of 1.63 million tons of LCE at a grade of 175 milligrams per liter. We also are able to say in the work that we've done, the total basin has 1.95 million tons of LCE. So in the polygon that we've submitted, we're capturing 83, 84% of the resource in the entire basin in our submittal. And we believe that's 1.63 million. That's a fairly significant quantity of lithium, which is more than enough to support our project going forward. We've also got an analysis of that resource in terms of its measured and indicated, which is 0.81 million tons, and that becomes the resource that we use for the pre-feasibility study, because you can only use the measured and indicated for your mining plans there. So I think these 2 things are very closely related: the CEOL and the resource statement, because it's very clear we do want to get into direct negotiation with the government. The release last week gave a timescale for that. The submissions were due by the end of January. The government have a Salt Lake unit within the ministry. They will then review the documentation to see whether it does comply with their criteria to go into direct negotiation with government. They will finish that. They've got essentially 50 business days to do that. That takes us to mid-April, and then we should get, and we expect, the clearance that we meet all the criteria, and then go into direct negotiation with government on the terms of that CEOL. The ministry then has 60 business days to provide us with their initial model, and then to negotiate the terms of that CEOL, which will be both area, quantity, royalties to be paid, and that will take us into the middle of July. In parallel, the ministry are carrying out a community dialogue, and they will get an understanding, what issues the local communities that may be impacted by the project could have, and anything coming out of that dialogue can also be included in the final CEOL award. If all okay, then the government signs a decree, and we get the contract, and we are up and running. Now, as part of the application, we've also submitted, or had attached to that application, letters from the 3 communities which we've been working with, which are local to our Laguna Verde project. And those letters are letters of support of CleanTech Lithium's application of DLE technology to the production of lithium in Chile, and its plans to re-inject the spent brine so we don't use water, and to use renewable energy so we make green lithium. And the communities also support the area of the CEOL application that we have. So I think we've gone a long way already to demonstrate to the government that we have very strong community support. Then going
a long way, Steve. I might just, that was quite a long answer to the first question.
Yeah.
I might just say, Paul, why don't you, I don't know what questions you would like to ask about the resource pool, but why don't you, from a geological point of view, ask a couple of questions here?
Well, I noticed that you expect in the press statement that each production well would produce something between 5 and 15 liters per second of brine fluids. And I understand also there was a statement that was well below what is the recharge rate within the basin. Can we talk about a little bit more about it as far as water use?
Yeah. We did some early work on looking at the pumping rates from wells, but last year we engaged Montgomery and Associates to work with us on Laguna Verde. They are probably the leading experts in lithium brine exploration and resource estimation. So a lot of work in South America, including Chile, in the past, and they managed the drilling and the pump testing program, which we did last year, and they've just completed their resource report, which we were reporting on this morning. They've been developing a hydrogeological model of the basin. They do the resource on Leapfrog, and within the PFS, they are doing the wellfield design, both for the extraction and the re-injection. And from the current work which they are doing, we're looking at a sustainable pumping rate of 15 liters per second, from each one of those wells. There is a recharge rate of about 570 liters per second into the basin. But you've got to remember, this is not like an evaporation pond where you're pumping out and evaporating. We are pumping out and re-injecting. So we have no water loss from our DLE process. So it's the re-injection which has to be taken into consideration. Now, as part of the pre-feasibility study, Montgomery will be producing the wellfield design and the re-injection wellfield design, which demonstrates that there is no impact no adverse impact on the aquifer or on any of the surface water features, either the laguna or the freshwater springs, which are there. And even though we've done a lot of work internally within CleanTech Lithium in the previous years, we felt it important to bring in a highly experienced independent consultant to lead the work for us. Because as we've explained in this next phase, once we've demonstrated we've got battery-grade lithium carbonate, once we're well on the way to the CEOL and completion of the pre-feasibility study, we will be engaging with potential strategic partners, to come into the project, take equity in Laguna Verde, and in exchange for obtaining offtake contracts, we expect them to provide or cornerstone the construction finance that's needed. So what we really want to be able to show is expert independent consultant has done the hydrogeological modeling, has done the resource evaluation, so it will stand up to very strict due diligence and scrutiny by a potential investor who's coming into the project.
And do I understand correctly that one of the main points for the pre-feasibility study is to demonstrate just what the speed and efficiency of extraction of the lithium from the brine then would be for the purposes of the economic model?
Well, I think the difference between DLE and the evaporation ponds is the speed to production. The evaporation ponds you're looking at from pumping the brine to producing lithium carbonate takes 12 to 18 months. From pumping from the aquifer at Laguna Verde to production of lithium carbonate, it'll take 1 to 2 days. So it is very, very fast. So the real issue with the pre-feasibility study is clearly we need to establish the resource. It is to do the engineering design for the full scale plant and the infrastructure requirements, develop the capital costs, operating costs, and then demonstrate the economic viability of the project. We did that at the scoping study, but as you all know, that's fairly early stage work. Now that we've got good resource from Montgomery, we'll have a good wellfield design from Montgomery. We've completed the engineering work with Lanshen on the process design. We're still working with Worley, who's leading the PFS on all the infrastructure for the project, the water, power, all the other facilities which are required. Then we'll have an updated capex. The scoping study we were looking at beginning of 2023. We're looking at $400 million. At that stage, there's been quite heavy inflation in the mining industry since then, and we'll see where we get to. But the scoping study showed a very, very robust project. We were looking at, I think, 43% IRR after tax and royalties. So we'll see end of March where we get to. We still believe that the project will be very, very robust at the long-term lithium price that we expect. Even at today's price of $10,000 a ton, scoping studies showed that we were break even at 7,000, so we were still viable. But half the world's production of lithium at today's price is operating at a loss. Most analysts are looking at a long-term incentive price to get new projects financed in excess of $20,000 a ton lithium carbonate. So we expect to see in the course of the next couple of years a strengthening of the price. There's many analysts putting out information that's saying the market's back in balance at the end of this decade. Some believe it's going to be much sooner than that. And we know markets and prices go in advance of the reality. So we would expect that whilst we're going through the DFS, going into the construction stage, to see a strengthening price. such that by the time we have first production, we're back into a reasonable pricing scenario, in excess of the $20,000 a ton.
Well, Steve, that was a very, very thorough reply to everything. I think you answered all the questions I would have asked. So, I mean, I suppose just one final question, because we probably should wrap it up because we've been talking for a while here. You're talking there about the lithium price. And we know the last few years for lithium stocks has been really difficult. People have sort of switched off it a little bit because the price has been weak. But as you say, it will change in the future. How long roughly until you think you should be in production? So i.e., what is the target time that we need to be trying to work out what the price is then, so we can see the economics then? So what is the sort of time length?
We said our target start of first production end of 2027. The government has said that they want to see 3 or 4 new lithium projects in production by 2026. And we believe they mean in development, in construction. We don't believe it's possible to have new projects by 2026. But the rate determining step on any project is not so much the engineering and the finance, because we're going to put all of that together. It depends on the permitting. Now, I go back in my early days in Chile, with Escondida and Collahuasi. I did the first EIAs for both of those projects, and from filing the EIA to getting the terms of the environmental permit, it was a 6-month time frame. The mining industry's been kicking back at the government because it's been taking 3 to 4 years. Okay, most of those are open pit projects, but it has been a lengthier time frame. The government's recognized that. It's had its debate with the mining industry and said, look, we're going to go back and relook at how to streamline the permitting. The president put out a list of 21 areas which they're going to streamline. And our message is, look, we want to work with the government to get into production as fast as possible. So let's work hand in hand. How are we going to get the permitting done as quickly as possible? And clearly, the way that we intend to work with the communities is to bring them into the baseline studies. They have a lot of knowledge of the area, the flora and fauna, and to be a participant in the environmental impact assessment. So we don't expect to get to the end of an EIA and then dump a large tome on the desk of the communities, and then the government say, well, what do you think about that? We want to work hand in hand with the communities, hand in hand with the government, to get the permitting as streamlined as we possibly can. So that's where we're targeting is the end of 2027.
I think we know that nothing in mining ever happens terribly quickly, unfortunately, but it's certainly revving up, and the majors are looking now more and more for getting involved in the lithium space and critical metals and battery metals. So the whole space, hopefully in 2025, will have a much more exciting and rewarding outcome for investors. So Steve, thank you for coming on for this. Paul, thank you for asking a few questions. I'm sure we'll catch up again in the future, and fingers crossed, as they say.
Okay, nice talking to you.
Thank you.